Well, howdy there folks, and welcome into today's video. Hope you guys are doing great out there as always. In this video, I'm going to reveal what stock I just put $22,000 into. This is a $2 stock, the smallest market cap company I personally own. And the stock has just kind of been floundering, hasn't really been doing much. But meanwhile, I've actually seen really good progress with the actual underlying business model recently. And I'm pretty excited about it. So I'm going to share that stock with you guys, exactly how many shares I bought and why I'm buying that stock. I'm actually going to take you into revenue models for this stock here today and what I think they can be doing here in over the next few years as far as revenue goes. And we'll talk a little bit about price to sales ratio versus that market cap right now. So hope you guys enjoy this video. As always, all I ask in return is that you smash that like button. That is literally it. If you haven't gotten a chance yet to check out the Hungry Bowl, that is on the iOS store and the Android store. That is a way to track your stocks and cryptos, as well as read our daily newsletter inside there, as well as listen to conference calls and do a little bit of research as far as stocks go in general. So I hope you guys enjoy that. That is the Hungry Bowl. Alrighty guys, what stock is this up here? Well, it is the Very Good Food Company. I haven't talked about this one in a long time. Ticker symbol on this one is VRYYF, okay? Yeah, I bought a lot of shares here today. Well over 10,000 shares in total, $22,000 plus of the Very Good Food Company here today. Now, I told you guys I did already own this stock. I just haven't bought in quite a while. And I have owned this for a bit, and I haven't bought any shares for quite a while. But now I'm up to 50,444 shares of the Very Good Food Company. Average cost on this one's $1.62. Up a pretty decent amount from the first shares we bought, up $35,000 so far from those ones, okay? But yeah, I mean, there's been some changes in the business recently that got me really excited. And we're going to get into that right now. And I'm also going to share my numbers with you guys, my revenue projections, okay? So first thing is, literally, you know, I understand if somebody doesn't know much about like consumer packaged products and whatnot, they might not think this is a big deal, but this is a huge deal. The company, I ordered from them last year, late last year. Their packaging was awful. I mean, just awful. I mean, it was like, I ordered a bunch of different stuff, including some hot dogs, and these things were so hard to open. They were like individually wrapped. You had to like use scissors, and it was a nightmare, okay? I nearly cut my finger off in the process, okay? It was a nightmare for consumer packaging. I was like, the current packaging the company had at that time, like there was no way that they were going to get on any type of real store shelves with that current packaging they had. But what I have seen recently is this company has gotten their branding and packaging on point very recently. And like I said, this might not seem like a big, huge deal for folks that might not know much about this industry. But if you want to get in Kroger, if you want to get in Albertsons, if you want to get in Walmart, Target, Whole Foods, these other stores in any sort of major way, you got to have your packaging and your branding right. If those things aren't right, you stand no dang chance in conventional retail. You can't just always count on people ordering through e-commerce because they want your product that bad. If you want to get in the big retailers, you got to have your packaging right, and they have done that now. And I'm super impressed with their current packaging. It looks great. The branding looks great. I can see if that was actually in a store. Like, imagine walking in Whole Foods, you see something like this. Like, I can see that actually selling, okay? So, which is the whole game for Very Good Food, because this is a super small company that hardly anybody knows about, right? And so for them, it's all about getting somebody to actually try your product and actually go and say, hey, this looks pretty interesting. Let me get some breakfast sausages. Let me get a package of the burgers or bratwurst or whatever, okay? So this, I saw this and I was like, this is a major deal. By the way, look at how much dang protein these things have. I mean, my goodness, this got more than the real deal Holyfield. Look at this, 19 grams of protein in one patty. My goodness, you gotta be flipping my flapjacks. That's a flipping good burger there, okay? Alrighty, guys. The stock has been doing a whole lot of nothing. It's just been in kind of a vicious downtrend recently. And there wasn't anything to be insanely excited about. The stock got probably way over pushed, right? And, the hype was building, and that's right when all the hype was building around pretty much anything that was super high growth. And this is probably my second highest growth company I personally hold. And we remember back in January, February, my gosh, okay, it didn't matter almost what it was. If it was a high growth stock, they were pushing to the moon, right? Anything that had any sort of excitement around it was pushing to the moon, and then they've all come back to reality, right? Including the Very Good Food Company. And now I'm looking at this company, and it's been trading recently at like market cap between 200 mil and 250 mil, 210 mil recently. And I'm like, okay, this looks like a very dang good deal now based upon the type of numbers I have this company doing over time. The company also just recently began production at the California facility, okay? Patterson facility to initially produce the Very Good Butcher's taco stuffer product, followed by unique SKUs, stuffed beast, and plant-based ribs, which that product I haven't tried yet, but I actually heard some good things about that, okay? The Very Good Food Company, a leading plant-based food technology company, today announced that it will begin food production at its Patterson facility located in Patterson, California, starting in September, okay, which is just around the corner. We're less than a week away now from September, okay? So this is absolutely big. The United States is where this company's real big opportunity. If this is going to build into, let's say, $1 billion company over the coming years, it's going to be because of the United States, okay? Now, let me get into some revenue projections, all right? Now, I apologize for the writing not being legible. I was just jotting this stuff down on my iPad last night, okay, before I went to sleep. So, what I have here is a decent execution model, and I apparently can't even spell right at nighttime, okay? This is a decent execution model I have for the Very Good Food Company, all right? Now, in terms of Very Good Food Company, I can't even, this is such a young company, I can't talk about this on a P ratio. We can't talk about P ratios for this stock right now. It's way too early days for this company. This is a price to sales ratio story, okay? Now, for reference, Beyond Meat trades at about 16 price to sales ratio, where I saw it at recently, okay? About a 16 for Beyond Meat. This is just for reference. Obviously, Beyond Meat's the big dog in this space. A company like Very Good Food Company is going to try to compete with a Beyond Meat over time, right? And Beyond Meat trades about 16. Much more mature company than something like Very Good Food Company. So this is a decent execution model. The company's already done 5.4 mil halfway through the year in terms of revenue. So to push 6 mil in this back half of the year is not an issue at all, in my opinion, okay? So if they just decently execute, they should do $12 million of revenue, which would be over 200% growth year over year in revenue. That would put the company on an 18 price to sales ratio based upon 2021 numbers, all right? Now, let's say we cut the growth in half, right? From whatever they're going to grow, 240 or whatever, this year, down to 120% growth next year, which I think is definitely doable. I think I'm actually being really, really conservative with that number. And most folks that are shareholders, this would probably feel like that's a pretty conservative number coming off the type of years they've been putting up. 120% revenue growth would put them at 26.4 mil revenue 2022. That would be essentially an 8.3 price to sales ratio based upon 2022 numbers, okay? Now, let's say we cut that growth in half again. Pretty aggressive, in terms of cutting it in half again. So let's say they do 60% revenue growth in 2023. That would mean the company does a 42.2 mil in revenue in 2023. That would put it at a 5.2 price to sales ratio based upon, basically the 2023 numbers. We're at a 3.5 price to sales ratio for 2024. This would be knocking that growth all the way down to 45% here. For 2024, that would mean they do 61.2 mil. And then we knock it all the way down to 30% growth in 2025. That would mean they do $80 million of revenue in 2025 if they did 30% growth at a 2.75 price to sales ratio based upon current market cap versus the revenues they would be doing in 2025. Now, obviously, if we're looking at this model, we're thinking about the stock price. Clearly the stock should be able to command a much above a 2.75, which is where you can see if this is just decent execution, they should do 80 mil of revenue, okay? 80 mil of revenue. The stock price, the stock should be able to command a 10 price to sales ratio roughly then, in my opinion, based upon the type of growth they would still have in the coming years. And so obviously, this company would be at, let's say, a $600 to $900 million market cap, something in there they could be commanding in 2025 versus, a little over 200 mil today. So this is why you can see why I'm not just excited about the company fundamentals, but the actual valuation currently on the stock versus where I think this valuation is going over the next, let's say, 4 or 5 years, okay? Now, that's a decent execution model. Let's get into an execution model where they actually do it on a high level, okay? So This is what I call the great execution model that I put together last night, okay? Once again, around a $220 million market cap roughly, okay? Now, if they execute on a great level in the back half of this year, they should be able to do 15 mil total for revenue. They've already done 5.4 mil, right? You got Thanksgiving coming, you obviously have the holidays. Very good food company put out some really impressive numbers last year in the back half of the year. Let's say they do that again, okay? So they grew 300% plus last year. They've been growing 200% plus this year. Let's say they really turn it on here in the back half of the year. That means they do about 300% plus growth back-to-back years, okay? They would need to execute on a phenomenally high level in the back half of this year to do that. That would put the company at a 14.6 price-to-sales ratio based upon the 2021 numbers. Now, 2022, okay, 160% growth I have them doing if they're going to execute on a very high level. 160%, which if they grew back-to-back years 300% plus, even at 160%, you're still talking about a big tick down there, okay, in growth rates, right? But I would say call it still great execution. They do 160% revenue growth. That's $39 million of revenue in 2022. That puts them at a 5.6 price-to-sales ratio based upon 2022 numbers, okay, a 5.6. Now, let's say we cut that growth in half going into 2023, all the way down to 80%, which coming from back-to-back 300% years, let's say, then 160%, to cut it in half against a very aggressive, but I would still call it great execution. 80%, 2023, that puts them at $70 million. That's a 3.1 current price to sales ratio based upon 2023 numbers versus where this market cap's at now. Obviously, the company would need to command a massively higher price to sales ratio than 3.1, so we'd likely see the stock price rise in a significant manner, right? Let's say the company does 60% revenue growth in 2024. That would put the company at 112 mil of revenue. Now you're talking about 9 figures of revenue. You're a big player now. You're not, I don't even want to call you a big player. You're a big player in the plant-based space at 9 figures, okay? And you're something to be reckoned with. This is when definitely a lot of companies, right around here is when a lot of companies would think about trying to acquire them. Or a very good food company say, hey, no, we're good. We're just going to keep beasting this out, keep putting up some big numbers, and keep doing our thing, okay? But obviously, a 1.9 would be way too cheap. Then let's say we knock the growth down to 50% for 2025. That would put the company at $168 million in revenue in 2025, which would put the company at basically a 1.3 price to sales ratio based upon what we're paying now versus where the revenue should be in 2025. If they were to execute, great, okay? So the moral of this story is, this is a price to sales ratio story. This is not a gross margin story over the next couple of years. This is not a net income story over the next couple of years. This is a revenue story 100%, okay? And if we're looking at where these revenues are trending and where the market cap's at, you can see that over the next several years, there's plenty of room for the upside for the stock price over the next few years because of the potential revenue growth here. Now, is it possible that the very good food company just goes from growing 300%, 200%, whatever, to all of a sudden 10%? Yeah, all things are possible in the stock market, but it's extremely unlikely that the company just goes from insane growth just to nothing overnight. The way I see them kind of branding these products, the packaging, the retail distribution I can see them getting into. This year has kind of been the year where they're putting everything in place, getting facilities up and running, getting in with, distribution companies that will get them into more of these retailers. This is a year they've been putting everything in place to hopefully have a nice, big major ramp up in business over the next few years. And so I look at this one and it seems like a pretty darn exciting stock. Longer term, it'll become more of a net income story longer term, and it'll be more about the margins. But in the short term, no one that's going to get in the stock cares anything about margins or net income in the short term. This is a price to sales ratio story. This is a revenue growth story over the next several years and seeing where this brand can go, okay? And so when I look at it at a $200-something million market cap, I'm willing to take that risk. The risk of all of a sudden they go from crazy growth to they can't grow anymore and something like that. I think that's very unrealistic. I think that's extremely not probable. And so I'm going to go ahead and take my chances and put my chips on the table, and we'll see what kind of happens here, guys. So hope you enjoyed this video. As always, let me know if Very Good Food Company is a stock you're interested at all in or you own it all. I would love to hear from you guys in that comment section. As always, if you're looking to download literally every single thing I know about running stock, projections as far as picking stocks, making money from stocks, running portfolios, things like that, check out the main pinned comment down there. That'll be to apply for the private stock group and our private Discord chat as well. And without anything else, I hope you guys are doing great out there. Much love as always, and have a great day.